And we are live. Tom Matson, you want to give us a little quick rundown?
Sure, JP. Thanks for doing this today, and thanks to those of you on our Back Nine team and our Quantum Business Golf team for logging in to learn about JP's digital marketing arbitrage. I've known JP for several years, and he's always been on the leading edge of webinar marketing and online information support systems. When JP approached me about this particular project, not only was I interested, but thought it would be something really valuable for all of our members. JP has nicely offered to share this information without any upsell or cross-sell or whatever, and I appreciate that because he's in the business of doing that for a living. But I think part of the reason he's done that is that there is some tremendous opportunity for all of us in business to take our capital and leverage it, and leverage it in a way that really takes the risk out of the leverage and gives us predictable returns. And so I'm real excited. Thanks for taking the time, JP, to share these insights. And for those of you that are listening live or to the recording, if you like what you see, be sure to send JP a little shout out, let him know. Thanks, guys.
Sounds good. Thanks, Tom. I appreciate it. And so, guys, we're going to jump right in. I called this Passive Profits, How to Double Your Money in 2014, Make 100% ROI, and Create Financial Freedom That Lasts. We're going to be introducing, as Tom kind of let the cat out of the bag, and I think maybe some of our emails talked or alluded to the idea that we're going to introduce a concept, what I'm dubbing digital marketing arbitrage. Nothing new about the term arbitrage, but the way that we're using it to make money is pretty interesting. And I want to share that with you guys as we move into this presentation. One thing I do want to say, Tom kind of mentioned that, I was talking about it before we started the recording, is there's not going to be any kind of order link or offer link given out or anything like that at the end. I will give you my personal email address, and you can touch base with me after we're done if what I'm saying makes sense and you'd like to have a conversation. But this is really a real kind of closely held thing. Tom and I had a conversation about this. I told him what we were doing. I told him what we were putting together as far as some of the folks that we're working with, and he said, you know what, that's really, really interesting that you're doing that, because some of the people that we're working with Back Nine and with Quantum Business Golf are actually looking for passive income opportunities and ways to put their resources and funds to work, and this might make sense to some folks. So we're just going to lay out what we're doing. I want to talk a little bit about what's going on right now and the reality of things, and then at the end, if there are any questions, I'll be glad to stick around and answer those questions that you might have. Save your questions till the end, because as people respond, as I talk throughout the presentation, your questions might end up scrolling up on the feed for questions. So if you'll write them down on a piece of paper or type them on something or whatever and save them till the end, that will actually work out best. I am going to be talking about the investment side of business and putting money to work, and I always like to put something up that at least says, hey, we're doing this on an educational basis. If what I'm talking about makes sense to you, then I certainly suggest you seek out your own independent financial advisor if you have any doubts or thoughts on what I suggest. This is purely educational, and I hope that obviously you learn something new and you take something away from this that is a different perspective than you had before on how to make money with your money. I've been on the phone over the last couple of months with advisors in the hedge fund and private equity world, and it usually takes about 3 times through explaining and sharing what we're talking about before they fully grasp it, because it's a little bit outside the box. And once they do, they're blown away, because there's nothing like what we're talking about in terms of the ability to give a return on investment. When I say double your money in 2014, I literally mean a way to double your money in 2014. So who is this workshop for? Well, first, if you're nearing retirement and maybe you didn't think about setting money aside because you never thought you were going to get there, you never thought you were going to be this age, then this workshop could be for you. If you're needing to build a retirement nest egg quickly, or maybe you're nearing retirement and you saw what you thought was going to be your nest egg get wiped out with the economic downturn in the last 10 years, some of the craziness that's gone on. I know some folks thought that their house was going to be their retirement nest egg, and then they watched that value just completely demolished. So, if you're getting close to retirement and you're thinking deeply about the idea of, holy crap, I've got to move fast and build some resources quickly, then this workshop is definitely going to be, I think, like the white knight on the horse for you. You're going to go, holy smoke, there is hope. If you are already retired and you've got some resources set aside, but you're sitting there looking at things like 1% and 2% return on CDs, and you're saying, I need more passive income, then this will actually, I think, be very in line with what you're thinking about. Not only passive income, but something that you could put to work that would be safe and very low risk, that you could have some sense of wealth preservation and principal and capital preservation, but yet have some opportunity for upside growth way beyond the ridiculous 1% and 2% and 3% that the banks are paying, and even bond markets and things that are out there right now. So this will make a lot of sense to you. If you're a high-income individual, and I do hang out with a lot of guys like this, Tom and I have talked about this before, we go out and we build income machines with our businesses, and that's really what it's all about, is creating a business that will spin off enough cash flow for you to be able to reinvest in other things and put your money to work. So if you're that kind of person and you've created a cash machine, but you're not really doing anything with your money to where it's working for you, then potentially this workshop will make a lot of sense to you. And then finally, if you're just the guy or the gal that's gone out there, you've worked hard, you've made decent money, but you're determined that you're not going to do that the rest of your life, and you're looking for a way to ultimately have financial freedom and build something, and you know that the market or the current opportunities and options that are out there for you don't seem to meet your requirements or expectations, then this could be for you. I thought it'd be fun to do a little bit of math fun. I don't know, you've probably seen this before. I've seen people do this live in a room. It was kind of interesting. But if you start with $1 and you double it every day, in 48 days, you'll own every financial asset that exists on the planet, which is about $200 trillion, which is pretty fun to think about, but obviously not going to happen. But we're not going to double your money every day, but I am going to show you very specifically and exactly how you can double your money every year. And this is what it looks like. So who wants this? Give me a thumbs up or a yes or a heck yeah in the chat if you would like these kinds of returns. So if you took $10,000 and doubled it and just left it in there and kept doubling it for the next 5 years, $10,000 would turn into $320,000 in 5 years. A $25,000 investment doubled every year would turn into $800,000. You're almost reaching $1 million. Imagine starting with $25K and reaching $800,000 in 5 years. A $50,000 investment doubled every year for 5 years would give you $1.6 million. And people say, well, that just seems too good to be true. That seems, very pie in the sky. Well, I'm going to show you very specifically how we're doing that and how you can be a part of that movement and that trend in a very, very different type of investment class that's out there. So here's the fact and here's the reality for today. According to a study by Harvard professor David Weiss and 2 colleagues, 46.1% of Americans die with less than 10% in assets. Not a very good story. And by the way, you Canadians are not exempt from this. We'll talk about some of that. According to Convergex Group, only 58% of us are even saving for retirement in the first place, and of that, 60% have less than $25,000 put away. A full 30% have less than $1,000 put away. Is that amazing or scary or eye-opening? I know that on this workshop there are some really savvy, smart folks, and you have much more than that. You've been very prudent with your money. You've figured out ways to grow your money. But I guarantee you there are some folks on here that are going, I kind of fit in that crowd. I haven't been doing what I should do. According to David, is it Leonhardt? The median family incomes have fallen substantially over a decade for the first time since the Great Depression. By 2011, family income was 8% lower than it had been 11 years earlier at its peak in 2000. So not only are things not going up very fast, they're actually going the opposite direction for some folks. According to a study by Edward Wolf published in the Bureau of Economic Research, the inflation-adjusted median net worth of American families in 2010 hit the lowest level since 1969. And from 2005 to 2012, total student loans outstanding increased by $539 billion, according to the Federal Reserve. So not only are people not making the kind of money they need to make, they're having to buy things on credit, and it's just ballooning and getting bigger and bigger. Now, this is scary. For those of you that thought that you were going to depend on your retirement, there's been a lot of people thinking they were going to depend on Social Security, a lot of folks thinking they were going to depend on their pension. The 100 largest public pension funds alone have $1.2 trillion of unfunded liabilities, according to actuarial firm Milliman. Not a good thing. If you and I did that, they'd put us in jail. But literally, they have outstanding liabilities they don't have the capital for. The International Labor Organization estimates a record 200 million people will be unemployed around the world in 2013. If you gave them their own country, it would be the 5th largest country in the world, people without jobs. And how about you Canadians? Household debt is now 163.4% of disposable income in Canada, close to the U.S. level at the height of the subprime crisis, writes the Wall Street Journal. So you guys are not exempt. You're not getting out of this. And I tell you, around the world, people are being shaken to their core. And people are wondering, where do we take this thing? What about if we take things into our own hand and become our own asset managers? According to a Vanguard founder, John Bogle, the average equity mutual fund gained 173% from 97 to 2011, but the average equity mutual fund investor earned only 110%, thanks to the tendency to buy high and sell low. What's crazy, I was reading this the other day, and I think it was around 2007, there was this major uptick, like 80% growth in the one of the major funds. So people came running with their money. Well, the next year, there was this major crash in the fund. People get scared, start selling. And so individual investors tend to let their emotions get away with them and make the wrong decisions and don't make the best choices as far as investing. What I thought was interesting is 173% between 1997 and 2011. And what I'm talking about today is how to double your money in 12 months. Not 12 years, but 12 months. According to Better Investing, the number of investment clubs has declined by 90% since 1998, from 400,000 to 39,000. What I think people are figuring out is we suck at this, okay? We thought it was a good idea, and we tried it, and it didn't work. According to a study by 4 economists from Cornell, Carnegie Mellon, and Vanguard, the number of investors who check their accounts drops by 8.7% following a market decline compared to a market increase. I got to thinking about that when I read it, and I think they're just afraid to look. I mean, you've probably been there. You see stuff in the news and you go, I don't even want to go look. I don't even want to know the truth. It's probably not good. So what about the professionals? If we don't do it good ourselves, how about the professionals? Well, Fortune magazine published an article titled 10 Stocks to Last the Decade in August 2000. This is almost not funny. By December 2012, the portfolio had lost 74.3% of its value, according to analyst Barry Ritholtz. So much for the professionals. An average couple will pay, here's the deal, even if you make money, an average couple will pay $155,000 in 401k fees over their careers, according to Demos, reducing an average account balance, the average account balance being $510,000. It'll reduce that balance to $355,000. So even if they make you some money, they end up taking a lion's share of it back in fees. Related to this, 84% of actively managed U.S. stock funds underperformed the S&P 500 in 2011. You'd have been better off just sticking it in an index fund, right? According to The Economist, over the past 10 years, hedge fund managers have underperformed not just the stock market, but inflation as well. So long and short is the economy has not been our friend. And you go, JP, I got it. I know that. That's why I'm here. I wanted to see if there was a better option. That's why you got my attention. So let's talk about it. We have been in stormy and turbulent times. We have been in a situation much like this picture you're seeing, where it's like we're out to sea and we're wondering when the last wave is going to come, and is it going to take us down with it, or will we finally find calmer seas and be able to get where we're trying to go in our voyage, in our trip? Kiplinger wrote in an article called The 8% Solution, they wrote, the shock waves from a Grecian burn and trading turbulence on Wall Street can send the market down hundreds of points in the blink of an eye. What I thought was interesting is not only did it speak to the turbulence of the market, but this article was about the 8% solution, and they were talking about making 8% a year on your money. Guys, that's better than nothing, but you and I both know you're going to have a tough time accumulating wealth on 8% a year, especially if you need to make up for lost time. The S&P 500 has returned about 9% a year over the long run, but few years see returns even close to that. Since 1871, the index has risen or fallen more than 20% in 1 out of every 3 years. Think about what that means. I need to get another chart in here to show but you've seen it, the up and down and up and down. Less than 1 out of every 5 years sees a gain of between 1 and 9%. So this 9% is really misleading. So the takeaway from that we've all seen is, what is the market? Volatility, uncertainty, unreliability. Another article in Financial Post said, calculating investment returns, actuarially speaking, 6% is a good rule of thumb. Not on my hand. I don't want that thumb, okay? You can keep your 6% thumb if you want. We're going to talk about a better way. So if you're sick and tired of the way things are now, what is the solution? What's the answer? Tony Robbins talks about 3 stages of financial wealth. 3 stages of financial wealth and really what that means. And I'll put them up on the board if you want to take notes. You can take notes there. But number 1 is financial security, where you still work, but the income from your investments covers your housing, your car, your basic food and living experiences, and basic entertainment. Financial independence is where you no longer have to work, and the income from your investments covers everything. And 3, financial freedom is where you no longer have to work, and the income from your investments covers everything you can think of and want for yourself and others. That's total financial freedom. I want to share with you a model. I mean, I showed you a few minutes ago what just $10,000 or $25,000 or $50,000 doubled over 5 years can mean to you. I want to show you a better way and a better system. Tom, when he sent out his email, let the cat out of the bag of kind of the phrase I'm using or the label I'm putting on this. I'm calling it digital marketing arbitrage. Well, arbitrage is not a new term, certainly not a new investing term. People have been arbitraging for years, where you basically take the difference between the price it's being purchased for, the price it's being sold for, you take the middle, right? So you're like in a toll booth position where you're taking money out of the middle every time the transaction is made. Well, in digital marketing arbitrage, we found that there's an opportunity in the online world to create this kind of return on investment, but in a very compressed time period. And I want to show you what this is. If you haven't been exposed to it, I hope you're as excited about it as when I was, because I literally stumbled across it. I wasn't out there seeking an investment opportunity. I was actually looking at how we could grow our own companies using digital marketing and online advertising. But simply put, digital marketing arbitrage is getting compensated for putting buyers and sellers together. Now, digital marketing arbitrage works like this. In the online world, there are companies out there that are advertising on the internet trying to bring in customers or clients. And in order to attract them, they have to advertise in places. Well, we figured out that there's actually an opportunity to get in the middle of that and be the person or the organization that connects those people with the products and services that they're looking for. Now, let me explain how I actually stumbled across this. We were looking for ways to generate leads for our business. Tom and I've talked about this. He's in the same boat. You know, they're looking for ways to find more franchisees, good quality business savvy people that want to open their own back nine business in their local market. So in our business, we were looking for folks that were interested in our products and services, our coaching, our consulting, our programs. And I began to look for ways that I could control the flood of people coming in as prospects into our marketing funnel. I had historically been very dependent on something called joint ventures, strategic alliances. Jay Abraham calls it host-beneficiary relationships. They work, but the challenge is that they weren't scalable. You had to continually seek out new relationships to be able to use that style of marketing. So I went on a journey to see how I could figure out how to buy paid advertising on the internet and convert it into sales and leads in our own business. In the process of doing that, what I discovered was that there is an entire industry out there of folks who have positioned themselves in the middle, in between the person that's willing to pay for a lead or a sale and the person that's looking for a solution to a problem that they're willing to pay for. And I discovered that you can get paid for generating a sale. You could get paid for generating a lead. You could get paid for getting someone to fill out a form. You could get paid for getting someone to view a web page or watch a video. You could get paid for getting someone to download a piece of software. I found out, I kid you not, you could even get paid for getting someone to input their zip code into a form and push a button. No kidding. Like $2 to $3 to get somebody to submit their information. Now here's where the light went on for me. I found out that you could invest $1 in driving the traffic and get rewarded anywhere from $1.25 to $3 for every dollar that you put in. And you could do it in a very compressed time period, which means if you put $10,000 in a short period of time, you could get back $12,500 to $30,000 return. And for me, the light went on and I said, wait a minute. In the investment world, no one's getting those kind of returns. Why aren't we putting these two pieces together and creating something that people could put their money into and get a massive return on investment that would, create a passive income? So that's what we started to look at. But everywhere I looked in this industry, I saw money. I started seeing chances to capitalize on people looking for things and companies looking for customers or buyers and connecting the two. And the more I dove into the industry, the more I realized that it is on an upward trajectory, guys. No downturn, upward trajectory. Here's 2009 to 2011 Facebook display revenue, and it's gotten even bigger and even bigger. U.S. print versus online ad spending, 2011 to projected through 2016 in billions of dollars. Look at this, flatlined, dropping. And that's magazine ad spending and newspaper ad spending. But look at online ad spending. Up, 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 up. When you look at the S&P 500, Dow, no matter what you look at, it's up and down and up and down and up and down. And you got to try to figure out where you're going to get on the train and where you're going to get off the train, where you're going to on the train, where you're going to get off the train. But what if you could become a part of something and capitalize on something that just goes up and up and up and up? That's when I realized we are sitting on a gold mine that hasn't been discovered and certainly hasn't been fully exploited. U.S. search advertising spending, up, 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 up. Real-time bidding. This is a form of advertising where literally it's in real time. You are bidding on the clicks as they're happening. Up, 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 and on and on and on. What I found out was the number of eyeballs are growing and growing and growing. Facebook, as we all know, last year sometime surpassed 1 billion users. 1 billion users. What is that? 1/7 of the population. Is that insane? Is on Facebook. And that's just one platform. There are many, many platforms. Google and Bing and 7Search and on and on and on. There's entire industries and networks of companies that are providing the advertising on blogs and magazine websites and on and on and on. And then just even bigger than that is mobile, which we know is just exploding. People, I read a fact, and I was going to put it on a slide. Last year, for the first time, there were more Apple products, mobile phones, iPhones primarily, and iPads, more Apple products sold in a day than people being born for the first time ever. I mean, the industry is exploding. The more eyeballs there are, the more money is, because these companies are having to spend the money to get to the people that want their products and services. So for me, it worked out to a simple mathematical formula, what I'm now calling my digital marketing arbitrage formula. And I surmised that as I began to see this and see that, my gosh, you could make big money, right? Big returns by arbitraging, that if it was this easy, everybody would be doing it, right? And I was right. What I found was there were a lot of people that found out about this. They heard about, quote, affiliate marketing and things like that. And they were diving in blind, like folks dive into investing online, without knowing what they were doing, and losing their money right and left, and then whimpering back to their corner with their tail between their legs. And so I realized that in order to make this work, you had to have the right pieces in place. And here's what I discovered. You needed, one, a high converting offer in place. You need to understand where and how to get the traffic. In other words, how to get that offer in front of the right buyers. You needed the knowledge, the experience, the tools, and the team to test campaigns, test traffic sources, test advertising messages, test offers, and get everything dialed in so that it's profitable. Now, I'm going to talk to you in a few minutes about how you can actually never risk a lot of money. But you do have to know how to test and how to dial it in. And then you needed to know how to scale the campaigns and monitor them all the way, making sure that they run profitably as they scale. And, of course, offers wear out. People get banner blindness and ad blindness, so you have to change out even within a campaign, you have to continue to shift and change and mold that campaign to keep it where it needs to be. So you have to look for new offers to promote so that we never run out of ways to make money with digital marketing arbitrage. So here's what I did personally. I shifted into immediate action a few months ago. I bought nearly every course I could get my hands on. I talked to coaches, media buyers, affiliate managers, and all sorts of other experts in this performance marketing industry. I joined membership programs, masterminds, forums. I surrounded myself. I created one of my own Facebook groups and began to surrender. Now I've got two, a very tight inner circle group of guys that all spend 6 figures and above on paid traffic and paid advertising. I wanted to surround myself with the guys who had done it. I learned years ago that you should never, ever, ever ask a poor person how to get rich, which means if you want to know how to do something, find the people who already know how to do it. And so I began to pick the brains of people who were uber successful entrepreneurs who had built their own businesses and online empires around online advertising, using this vehicle to grow their companies with their own dollars on the line. And here's what I discovered. Are you ready? Here's what I discovered. It's a lot of friggin' work. I mean, it really is a lot of work. In fact, when I found out what kind of work it was, I glazed over. I was like, I don't want to do that. I don't want to do that kind of thing. And I figured if I felt that way, there's probably some other people that felt the same way too. So I said, I'm going to build a team. I'm going to get the people in place to make this happen. And then I began to surmise, what if you and I could reap the financial rewards from digital marketing arbitrage without any of the work, without any of the risk, without having to deal with people or find offers or test or scale or use software or learn an entirely new lingo and an entirely new glossary of terms just to be able to carry on a conversation? What if we could reap those same financial rewards? Warren Buffett, obviously the guy's been just moderately successful in life. He says, rule number one, never lose money. Rule number two, never forget rule number one. And guys, I would literally pull, I know some of you are good at it, but I would pull my hair out trying to figure out the stock market and timing and choosing the right things. I suck. I would never go like Vegas and me won't get along. Why? Because I don't like gambling. I don't mind risk, controlled risk, but I don't like gambling. And so for me, as I started moving into this thing, I said, look, if we're going to put up big sums of our own money, as well as potentially consider bringing other people's funds in and creating a vehicle to invest in digital marketing arbitrage, I wanted to make sure that we could do it without risk and that we could do it where we never lost money. And so I came up with a formula for how to never lose money in digital marketing arbitrage. Now, it wasn't my formula. It's what guys that know this industry were doing all along. If you go to, think about it this way, you go to the ocean, there's a couple of ways that you can get in. One, you can do like those folks down in Mexico. What is it, Acapulco, where they jump off the cliffs, cliff diving. Been plenty of people do that. Lived through it. Been a few people that have jumped off a few cliffs and didn't realize there were rocks 3 feet under the water. I wasn't willing to do that with digital marketing arbitrage or any other kind of investment in my own business and my own life, my own finances. Now, there's another way to get into the ocean. I live in Cocoa Beach down in Florida. I can go out to the ocean. I'm 2 blocks from the ocean right now. I can go down to the ocean. I can walk in on the beach. I get my toes wet, then I get my ankles wet, then I get my knees wet. Somewhere out there, I might stumble across a sandbar. I might get knocked back by a wave every once in a while. I might even get stung by a jellyfish every once in a while. But I'm not going to break my head on rocks 3 feet under the water because I'm going to go in, easy, easy, easy. Well, we figured out that we can do that with digital marketing arbitrage, where we never risk more than a few $100s, and certainly never more than $1,000 before we have a campaign completely and fully dialed in and know that it's profitable. Meaning, for every dollar in, we're going to get at least $1.01 plus, almost always a lot plus, but at least $1.01 back for every dollar we put in, so we never lose money. But when we're in that testing phase, we put a few bucks in, we test it, we optimize, we dial it in, we get it right. And I was talking to a buddy of mine the other day, and I said, it's a lot like, imagine if you could go and buy Apple stock, and you could put $50, $100, $200, even $500 into Apple stock, and only when you were guaranteed and sure that you were going to make a profit on every share of stock that you bought, did you then put in $250,000 or $500,000 or $5 million into Apple stock, only when you knew it was going to be profitable. Well, guys, with digital marketing arbitrage, we have that ability to basically reverse the risk by tiptoeing in what I call my beach entry approach. So we never risk more than a few $100 getting a campaign dialed in. And that got me to where I am today. And I said, you know what, if I'm thinking this, I guarantee you some other folks are thinking this. Why not form a small private investment club, very, very exclusive, much like Warren Buffett did in his early days, pull together some guys, friends of mine, colleagues of mine. This is where I literally posted a note in chat, in Skype, to Tom Matson and said, let me run this by you and see what you think. And I even put in my note, I said, I don't know if you have the appetite for this kind of thing, but I want your feedback, because I know he's raised capital. I know he's been a passive investor. I know he's been an active investor. I know he's been a partner and a CEO and all these things. So I appreciated and valued his opinion. And he came back from me and was like, this is very interesting. We need to talk next week. So we got on the phone. It's been a couple of weeks ago. But I said, why not put together a small private investment club, very, very exclusive, just a few guys, and let's go put this to work and build this up and create a passive income resource for us. And I created what I call Harbor City Capital. Instead of a turbulent, ocean and not knowing where you're going to end up, I said, why not create a place where people can safely put their money, where they would know that, number one, there's massive transparency, and I'll talk about that in a minute, and that they would know that our style and strategy is to never gamble, that we are only going to take a few $100s, test a campaign, get it dialed in, and then scale it up and make money for everyone in the fund. So here's what I've got for you. We're forming an exclusive club of private investors. We're pooling our funds together in order to take full advantage of and fully monetize digital marketing arbitrage opportunities. What I found out when I got deeper into this world was that when you have capital, you can buy traffic cheaper, and you can also go to the people that reward you and get, in some cases, up to twice as much money on the reward side for creating that result, that action, than you could if you only drove a small amount of volume. So it made complete sense for us to put our funds together and go and buy massive amounts of traffic. Now, ultimately, the minimum per member in our group is going to be between $250,000 and $500,000. But we are not, like, I know it sounds silly, but I'm just like so risk averse when I'm doing things like this. I always want to ease in, tiptoe in, make sure everything works like we believe it will. We decided to put together an initial seed fund of between $100,000 and $250,000, and here's how we're doing it. First, we're taking a small group with a maximum. We won't even take it if you have more. A maximum initially of $25,000 with an opportunity to put more into the pool as we expand our team and campaigns. Because here's what I'm doing, just so you see the method to my madness. I've got 3 teams in place now to buy, do analysis, do creative, and everything on these advertising campaigns. These are all guys that I fully vetted, had them show me, literally walk me through their ad buying accounts and show me proof of where they've run profitable campaign after campaign after campaign across multiple niches with budgets equal to or similar to what we're doing, and talk to them about scale to make sure that they understood where we were headed and that they could scale this up. So I've got one team in place that's literally, we just now brought in our first capital into our group. We're literally cranking up our first campaigns, 3 EDU offers and a BizOp offer that we're driving traffic for right now. But maximum of 25,000, but understanding that we really want folks that would like to put in more once we are ready to scale this up to the next level. There are only 10 of us, and actually there's not even 10 spots, but I'm taking a total of 10, keeping it very private, very exclusive. And I thought some of my clients and colleagues might want to know about it. When I talked to Tom, he said, hey, well, let's run it by some of our guys and see who might be interested. We've been already talking about passive income opportunities. And here's what it's going to do for you. 60 to 100% ROI in 12 months. Remember I said a few minutes ago, not 12 years, not 3% a year, 1% a year, not 12% a year, not 25% a year, 60 to 100% ROI, meaning you could literally double your money in a year. And I created a couple of options because the more I had conversations with people, different people had different needs and expectations. I'll explain that. Giving complete clarity, just like I've described the process to you today. Every person that we've brought in so far, I've had personal phone call conversation. We're talking about what we're doing. We're giving people an understanding. This is different. It's outside the box. It's not stocks. It's not bonds. It's not currency. You know, it's not real estate. It's different. So some people need a little bit of understanding of that, and that's why we've had some conversations. Risk reversal. We never invest more than a few $100s testing, so we know every campaign that we scale will be highly profitable. Then we've got tools in place, software, that will immediately stop a campaign if it drops below a certain performance benchmark, meaning once we've got it dialed in and we scale it up, it runs on autopilot and creates passive positive ROI, but it automatically is set to alert us and shut down if it goes beyond a certain perimeter. And then the next thing I said is, if I was the guy on the outside and I was putting my money in and I wasn't running the team and seeing what they're doing every day, I'd want to know what's going on. No more black box investment funds, where you don't know what's happening with your money. So what we're doing is initially we're going to have weekly club meetings to let everybody that's on our team, you don't have to be there, but we're going to do a go-to meeting kind of like we're doing right now. You can come. I'll show my screen. We'll talk about what we're working on, some of the stuff that we're testing, where we're headed next, just to give you an understanding of how the money is being put to work. Not so that you understand every intricacy about this industry, but so that you can kind of see where your capital is making money. We've got 3 choices for participation, and this came from some people saying, you know what, I'd like to create a passive income source. Other people saying, I want massive growth. I don't need the income right now. So, and then some folks saying, hey, could I do something short term? So I ended up putting 3 different options together. The first is what I'm calling a passport fund. It's 5% paid monthly, total of 60% earned in a year. At the end of the year, you get your principal back, plus you will have been paid 60% over that year, paid out each month at 5% a month on the 5th of the month. So if somebody goes, man, I really want passive income coming in every month. If, as we scale this up, you had $100K, you'd be getting a check every month for $5,000. At the end of the year, you would get your $100,000 back if you decided you wanted it back. Plus, you would have been paid $60,000 in earnings or return on that $100,000. Guys, there's nowhere else you can get that I know of. I mean, there's a few things out there people are pitching, but this is a sure thing that every month I'm going to get that check. For people that said, hey, I'm willing to leave the money in and let you use that money, I don't need the return immediately, I'll take it at the end of the year, that gives us more money to buy more traffic, make more money. So we said, we'll give a bigger return on that. So this is how you can literally double your money in 2014. You leave your money in for 1 year. At the end of the year, you get all your money back plus the exact same amount in return on investment. You put in $25,000, you get $50,000 back at the end of the month. At the end of the year, you put in $50,000, you get $100,000 back at the end of the year. So that's for the person that says, I don't need to see a check every month. I'd love to know how things are performing and what's going. I'd like to come to some of the, club meetings and all that online, but I don't need to see a check coming to me every single month. And then for guys that said, hey, could I tiptoe in? Could I do something more short term and maybe 90 days? So what I created was explorer option basically, and said, okay, shorter term, you're going to get paid a little bit less, but that's 12% in 90 days. A lot of people aren't making 12% in 12 months, much less 12% in 90 days. So here's an option for you to put your money in, try this out, make sure you're happy with it. You're going to get paid every month, every month, every month. And at the end of the 90-day, you'll get your principal back, or you can make a decision if you want to roll it forward. We'll set up a new agreement with you. And then I'm totally sure, this is very organic, so I'm sure that we're going to have other options, or we may figure out a different or better way to manage the investments and stuff. But we are honoring and respecting the guys that come in early. And when we get ready to scale this up, if we raise enough capital within the 10 guys that are in initially, we won't bring anybody else in from outside. So our goal is to put this initial 100 to 250,000 together, go out for the next 30 days, the month of January, lay down our own track record, know what exactly it's going to take as far as our teams. I've got 3 teams. One of my guys already told me, he said, I can manage $500,000 to $750,000 budget all by myself and roll it up. So we know that we've got the resources in place to cover what we have now and what we're bringing in initially. And then we'll talk about scaling it after that. So when you think about the Passport Fund, where you're getting paid a check every month, a 5% check, if you were to put in $10,000, you get a check for $500 every month. $25,000, you get a $1,250 check. If you put in $50,000, which you can't do that right now, maximum is $25K. But if you did that, you'd get $2,500. Put $100,000, you get a check every month for $5,000. I know some folks that would retire their spouse. They would bring their spouse home from their job. So maybe if they took $100,000, moved it over into the fund, literally, With that $100,000, they could retire their spouse. They'd be making $60,000 a year passively without having to work for it. With the Voyager Fund, when you leave the money in, you literally double your money. The math is simple. 10 turns into 20, so you make another $10,000 in profit that year. 25 turns into 50, so you're making 25,000 profit, and on and on and on. And then with the Explorer idea, basically you're going to get a check every month, and then at the end of the 90 days, you'll get your money back, so you will have made a total of 12% over the 90 days, and you'll get your principal and your interest back. Then I had an idea. Now, this was back before Christmas, but I'm willing to honor this. We actually have a little bit more room to bring somebody in to do this, or a couple of people with smaller amounts. But I asked my lead buyer on team number one, I said, if we had 20 to 50K this week, could we turn a significant profit before January 1, proving out some of the concepts? He came back and said, I can do it myself easily. And said, okay, I'm going to offer a couple of our early peeps a chance to make money before January 1. I will honor this, but now that we're, 6 days away from or 5 days or whatever away from the first, then we'll just push it out. So it'll be like your official time period might stop January 5th to give us time to make money with the money. But what I said was, fast movers, I would give an earning opportunity to make 10% in 10 days with a maximum, not per person, but a total, because I didn't want to overstate what we could do. We would take $25,000 in early. Everything else is going to start January 1, but we would take $25,000 in early because we had some offers that he had already identified that we could make some really good money with. So we have 3 EDU offers and a BizOp offer that pay very well, and he said, I know that we can make a big upside on that money really fast. So if you're the kind of person that is a fast mover, that you're able to jump on it, and we can have a conversation by phone, you want to be a part of what we're doing, we'll talk about that. You'll make 10% in 10 days, plus you'll get that money rolled into whatever other plan that you go into, if it's 90 days or the year-long plan. So let's just say that you were to go with the Explorer idea, which is 90 days, 12%, you'd actually make 22% on your money in 90 days, which is pretty insane. Forbes magazine in an article said, money begets money. The earlier, the better. You will make far more money by investing early and reinvesting the dividends, interest, and gains than you will by earning a paycheck, unless you're a movie star, pro athlete, or heir to a major fortune. It matters not to me which of the three you choose, but if you put your money in and let it ride for a year, you will double your money in 2014. 25,000 will become 50,000. 50,000 will become 100,000. And let me tell you what, it's a beautiful thing. I think I had yeah, that was up at the beginning, what we showed where we doubled it for 5 years. It adds up really, really quick. So here's what you should do next. There's no form. There's no, button or anything you got to have. Email me personally, jpmaroney@gmail.com. Send me the following information: full name, contact information, minimum you have to invest, maximum you have to invest now and going forward. So like one of the first guys that came on board, Greg, he lives in California. He's been involved in real estate investing and Forex investing. He was on the first little call I did with my own list, and he contacted me by email along with several other guys, but he contacted me. We had a conversation, and he said, you know what, I'd like to be a part of the Fast Movers. So he became a part of that. He said, ultimately for January, I'm probably looking at $25,000, maybe $50,000 after that, a total of around $100,000 that I would look to bring into this fund. So I'd like to know the same thing from you. What's the maximum? What's the minimum? And then why should we have you in our club? We literally already have 4 of our members locked down. We have 6 more places. We just started talking about this to folks. You need to get on board. If you want to get on board fast. There's no pressure. You're not going to have anybody strong arming you. It's a good old boys network, and we'll get on the phone, we'll chat, make sure you understand exactly what you're getting into and what we're doing, how it works, what the parameters are. I'll send you an agreement, what it looks like. If you don't have the ability to survive the loss of capital, don't do this. Why would I say that, having already said that we don't risk the money? Well, I just don't want people using their last dime to get involved in something and stay awake at night worrying about whether or not their last penny is going to be lost in some investment idea. Guys, we've taken every precaution. The way we invest the money in traffic, the way we tiptoe in, my beach entry approach, it works. It's very, very low risk, but any kind of investment opportunity stands a chance of losing money. And so this is for savvy men and women who know, what the game is and exactly what we're getting into. And if you are that kind of person and you are sick and tired of non-returns or low returns, 1 and 2 and 3% or 8% a year or whatever, and you need to ramp up fast and put capital to work to create passive income, to create massive wealth and growth, then get in contact with me. Let's have a conversation. If it makes sense, we'll move forward. If it doesn't, we won't. No harm, no foul. Tom, are you still on? And if you are, do you have anything to add before we finish up, buddy?
Yeah, you bet. I'm still on. Love it. Appreciate the time and the insights and the different ways to participate. I like it. I like it a lot, and I think there's some good options for people out there. I see you've really worked on this since we talked last, so good for you. When are you going to take your Christmas holiday is my question. Good for you.
Yeah, for sure. Thanks a lot, man. Well, I know people know how to get in touch with you, so if they want to, vet it past you or speak to you, I'm sure they'll be in touch. And people have got my email. This is my personal email. This is the one I check, and it's on my phone and on my computer. So, guys, get in touch. Let me know what you think, and we'll look forward to talking to you very, very soon. Tom, thanks a lot, man. Y'all have a great rest of the holiday season, and then you and I will be chatting offline.
You got it. Thanks, JP.
Bye-bye.